Was today's inflation number enough to convince members of the Fed to change their tune? Or are we still going to have the hawks in charge of the Fed come our next meeting in September? Let's break down that PCE number from today. And the initial reaction was one that sent the 10-year Treasury higher. It came in slightly over forecast. But once we peel back the onion a little bit, core actually came in right at forecast. And that's really what the Fed is focusing on, because food and energy, they say it all the time, extremely volatile. And given the fact that we're still remaining in this conflict and we're not seeing inflation skyrocket, I think that's a long-term positive for us. With regards to the Fed, I still believe they're going to be in the camp that they want to see one Fed rate increase this year. And I think you're going to get enough Fed members on board to achieve that. However, I'm here to say with these reports that we've seen recently, I think you can make the case that we can pause at the current moment. We can shout that we're in a hawkish kind of state, but we're not going to increase the Fed funds rate. And I don't really think they have to do that to influence the markets. So who am I? My name is Kevin Weedmark, AKA the Mortgage Mouth. Come to you each and every day what happened in the marketplace, how it affected interest rates, what do we got going out into the future, and should we float or lock? So really quick, initially we saw rates go up today. We've seen them flatten out this afternoon. We are essentially sitting where we started on the 10-year Treasury today. We also have oil. We were down below $80 a barrel. We're now above 82. I think if we can hover below that 80 number, and if we could get below 70 for a period of time, man, we'd really see an improvement in rates. And then on the float or lock, I'm still in the float camp. I don't think this PCE number was horrible. I would still be floating, and I would be waiting for what Fed Chairman Warsh has to say tomorrow at the Jackson Hole Symposium. Hopefully he takes a little bit more of a dovish approach, squashes a little bit all the hawks that have been chattering lately, and maybe creates a little bit of stability of where we are sitting with the 10-year Treasury so it doesn't send rates skyrocketing. And if you have to lock, as always, make sure you talk to your lender about yield spread premium, offset those closing costs, create more affordability, and put yourself in the best financial position possible to refinance in the future. Got a comment? Bring it. Love to hear from you. And I'll be coming to you tomorrow with another episode. Until then, cheers.